Today, we are discussing part 2 of the ASML analysis. And we don't want to spoiler, but we did both buy some ASML stock after the stock market reaction on their Q3 2024 results. Why? You will find out in the last part of our ASML analysis. Let's go! This analysis is for educational purposes only. Always do your own research, and it's likely that one of us, and in this case both of us, currently holds or will hold a position in the companies discussed. The Dutch Investors is not responsible for your decisions. This podcast is recorded on the 28th of October 2024, and the stock price is currently trading at around 680 euros. So let's begin with the management team. Mathijs, who is the relatively new CEO of ASML?
Yes, I think in part 1 we spoke about Peter Wenning and Martin van der Brink and how important they were at forming ASML. But it's nice that they appointed a new CEO who's in charge since February 2024. And his name is Christophe Fouquet. My French accent is not that good, but he's 46 years old and he is working at ASML since 2008. So he is from inside the company, which is always a good sign, I think. It's also good to mention that he is not new in the semiconductor industry, because before ASML he worked at KLA Corporation. If you remember from the first part, KLA is a company who does a lot with the processing control and the testing of semiconductors. So yeah, Fouquet has steadily risen through the ranks at ASML, and he has played a key role in some significant developments. For example, he was involved in the adoption of EUV technology in 2018 and 2022.
That's the CEO.
That's the CEO in very short few sentences, yeah.
Yeah. But if you listen to the last few earnings calls, he sits there as well. You hear him speaking. What's your impression of him?
Well, you can hear he's French. It's not only his name, but also his accent. But no, without jokes, he looks like a very introverted and smart CEO. He doesn't like to brag about the company, I think. He's very realistic, connecting as well. So yeah, I think that's what I can make of it. What do you think about him?
Yeah, I listened to the last earnings call, and I think he's somewhat softer than Peter Wenning. Yeah, he looks more kind to be. Yeah, not that Peter Wenning was. That doesn't mean to say anything about the qualities, of course, of Fouquet or Peter Wenning, the former CEO. But yeah, that's the impression I have of Christophe Fouquet.
Yeah, I think at least it's very good to see that he is from inside the company and that he was appointed by Peter Wenning and Martin van der Brink. They more or less raised him to become the CEO.
Yeah, he was several years under the wings of Peter Wenning and van der Brink, and he looks very capable. So that's good.
Yeah. So let's see in the coming years. Of course, the CFO of every company is also very important. And what can you tell us about him?
Yeah, the CFO of ASML is Roger Dassen, and he's currently 59 years old, and he has been ASML's CFO since 2018. Roger Dassen has a long career in financial functions and looks very competent. The impression he gives me is that he knows not only things about finance, but also knows quite much about the technical side of ASML.
How do you know that, Bouke?
Yeah, I've seen him speaking at a live session during one of these investor events. Dassen comes across as a honest and approachable individual. And during that event, he also told what ASML was doing. And of course, he talked about the finances, but also about the technical side. And it's good to see a CFO not only knowing things about the numbers, but also of what the company actually does and how the future looks like in the industry. CFO Dassen and also CEO Fouquet have been working multiple years side by side with the two important persons for ASML. And you know who I mean, right?
Yeah, of course, and I hope the listeners do as well, because in part 1 we spoke briefly about them, And the first one, of course, I think the most important person in the maybe even the history of ASML is Martin van den Brink.
Yeah, Van der Brink is such a unique figure.
Yes, he's involved with the company since the beginning. So since they were working in this shelter on the Philips terrain, and he has taken part in the development of almost every machine of ASML, including the newest EUV machines. It's a very interesting personality as well. He's very direct, very result oriented, I would say, very interested in technology. And I remember from the stories in the book Focus that Peter Wenning often had to keep him calm when they were visiting Carl Zeiss, for example, and that company couldn't make something happen. He could become quite angry following the book, and then Peter Wenning had to call back to Germany to Carl Zeiss and apologize ASML for the behavior.
But also for the engineers at ASML, it's quite hard to work side by side with such a direct, result-driven man. Because let's take by example, you design and make the DUV machine work. It's quite a complex machine, and you're very happy that it worked. And Peter Wenning would immediately say, let's go to the EUV machine. This is just the beginning. We have to work even with more materials, with more complex systems. I think it's quite hard to work at ASML with such a man standing behind you.
Yeah, agreed. I think you have to have a thick skin, as we say in Holland, right? I don't know if it's an English verb as well, but
No, I don't know either. Let's move on to the former CEO, Peter Wenning. He became the CFO of ASML in 1999, and he became CEO in 2013. And one thing I do remember about Peter Wenning is that he famously said in an earnings call, I don't know which earnings call, but he said ASML is not even halfway there. And this is also reflected in his forward-looking statements. By 2030, ASML expects to generate between 44 billion and 60 billion in revenue, compared to about 28 billion in 2023. So what he says, we see also in the numbers and his financial outlook, and that's something, yeah, investors do appreciate.
yeah, and it's very interesting to see whether that forward-looking statement will be the same because the investor day is almost there. I think halfway November. So let's see if Fouquet agrees with him, or maybe they will revise the outlook again, like they did in the third quarter.
That would be really sad to see, to be honest, because you also think like maybe he did left the ship because he saw trouble coming, or yeah, things like that. That he left because of that, but I'm not sure about that.
You think he would do that?
No, I don't think he will do that.
No, me neither.
No.
What about, let's talk about the incentives for the management. Because as you know, incentives are very important for human behavior and decision making. So can you tell us something about the incentives at ASML and what kind of decisions we can expect based on that?
The management's total remuneration consists of three parts. And first, there is, of course, the salary, also known as the base salary. And this is less than 25% of their total compensation. So this is just a small part. And the other 75% is based on short-term incentives and long-term incentives. When we look at the goals in the short-term incentives, they are mainly based on financial goals and primarily focused on the EBIT margin, so the operational margin. And also part of the short-term incentives are the technology leadership index and customer orientation. So this is what the short-term incentives look like. And when we go to the long-term incentives, we see that it's based on relative total shareholder return. So that is the stock price plus dividends compared to some other companies. And we also see here, notably, that in the long-term incentives, they included return on average invested capital. And this is something we don't see that often. What are your thoughts about this, Mathijs?
Yeah, we think the ROIC is always a good metric to have as a company because it encourages the management to allocate the capital wisely. And in the case from ASML, well, profits can, of course, they can fluctuate. And by taking the ROA IC, ASML is getting the average of 3 years, so the ROC in 3 years, which is a good metric in our opinion.
Yeah, that's right. And the only thing about the incentives that I'm not particularly happy with is that they also included the EBIT margin. Because as you know, R&D expenses are accounted for in the income statement and are not capitalized on the balance sheet. So the more ASML invests in R&D, the lower the EBIT margin would be. And this could create some unintended incentives for the management to reduce R&D spending. Yeah, we will come back to this point later if they actually do cost cutting on R&D. Um, I will spoiler it here. They don't do. They invest around 4 billion in R&D in the last year. So yeah, the R&D expenses are enormous, but this is just something to keep an eye on.
Yeah, and it's good to know that in both the short-term incentive as well as the long-term incentive, there are um, there are measures for the technology leadership index, which stimulates R&D. So maybe EBIT doesn't really account for it, but I think the measure in technology leadership will make sure that ASML will keep investing in R&D.
So R&D expenses are included in the technology leadership index. Do I understand that right?
I don't know if that's the case directly, but indirectly for sure, because I think it measures like the patents, how technology how advanced a business is operating in terms of technology. So
Yeah.
to come to that point, you have to invest in R&D, of course.
Yeah, you have to innovate a lot, and yeah, you're right. And maybe you can tell us something about the skin in the game of the management team.
Yeah, in 2023, Christophe Fouquet total remuneration amounted 3.5 billion, with the majority earned through long-term incentive rewards. And by the end of 2023, Fouquet owned around 7,000 shares of ASML. And with a stock price of around 680 euros, this equates to around 4.5 million worth of shares. And this is around 6 to 7 times his base salary. Of course, Fouquet is just CEO since 2024, so I think the share-based incentives will now really starting to take off. So I think in the coming years you can expect Fouquet to raise his share capital.
Yeah, and then let's move over to Dassen, the CFO. He owns around 70,000 ASML shares, which is more than 70 times his base salary in stock. So that's quite good. And when we move over to Wenning and Van der Brink, the former CEO and Chief Technology Officer, um, I'm just so curious about if Wenning and Van der Brink sell their positions in ASML. Now they don't have management functions at ASML. And yeah, I'm not sure how we can track this. Maybe it will be shared in the news or something like that. But if they sell, that would mean, yeah, that would be a small red flag to me that they don't have, yeah, maybe that they have less trust in the company now that they are not heavily involved, or uh, yeah, maybe you can share your thoughts about this.
I don't know, like Van der Brink's position of 11,000 shares is not that much. It's less than 10 million euros. So if he would sell his position, then I wouldn't be too surprised, I think, because maybe he wants to give something to his children or grandchildren, or he wants to buy a house in Spain, just to name some things. But of course, it will be a very positive sign if they keep on to their shares. And I don't know either if we can track this. I think they don't have to file their positions to the Dutch registration, so I don't know.
Yeah, I don't know either. Yeah, but when we look at the share count of Wenning and Van der Brink, it stood out to me that Van der Brink, such an important figure at ASML, who has been working there for more than 20 years, has not that much shares. I thought, he is so heavily involved. He's so important for the company. I think he has been rewarded for that in shares. But of course, he has quite a lot of money, but it's less than the CFO who's been working there since 2018. So yeah, that's something I didn't really understand, but it are the facts.
Yeah. Maybe he just doesn't care that much about the money. And we know that he loves the technology, he loves ASML. So I don't know, maybe he just doesn't care that much about the money or about the stock market.
Maybe he cared more about pushing the boundaries of the laws of nature.
Yeah, I'm sure he does, yeah. All right, then let's go to the financials. So Bouke, can you talk us through some important financial metrics for ASML?
Yeah, of course. One thing that stood out to me was their revenue growth. Of course, we know that ASML is a fast-growing company, but over the last 5 fiscal years, from 2018 to 2023, the revenue growth was 20% per year on average. So that's whoa, that's so fast. And the revenue in 2023 was 27.5 billion euros. And this is gonna be in 2024 around the same number because they announced this is some kind of transformational year, and in the last earnings call they also announced that next year 2025 will be some kind of the same year, not that much growth that we expected.
Yeah, and to reach the midpoint of this updated outlook for 2025, ASML has to grow 16% next year, right?
Mm-hmm. Yeah.
And for the midpoint of the given outlook for 2030, they need to grow 8% per year between 2026 and 2030. As we said before, we don't know if this outlook will still be in place next month. So let's wait for that. But it seems pretty reasonable, right? To grow with 8% per year.
Yeah, I think, to be honest, Matthias, this outlook, especially that from 2030, is a little bit conservative because if we saw, of course, we cannot extrapolate the growth in the past, but when we look at the trends and the market dynamics, I think, 8% growth per year is just doable.
I maybe even think that they can revise their outlook upwards because when they gave this first projection in 2022, there was not really a AI boom yet. So companies like Nvidia didn't do far as great as they do now. So maybe with all the developments in AI, IoT, you name it, when I take that into account, they will even come to a higher revenue guidance.
Yeah, and Matthias, I saw we just had a little typo here. ASML needs to grow with around 10% per year till 2030 to uh, get to their growth outlook in revenue, and the gross margin needs to grow 8% higher than in 2025. So that are the good numbers.
Yeah, that's a good correction of you, and but I still think it's pretty reasonable to do it.
Yeah,
Also, if you look at a lot of research from companies like McKinsey, they project similar growth for the entire industry.
yeah, yeah. So ASML as a monopolist, yeah, of course. Also here, they need to grow on average with around 10% per year. I think some years will be 15%, some years maybe even 20%, but there will also be, because of the chip cycle, there will also be years when they don't grow or they have even negative growth. So that are my thoughts on growth. So we discussed the revenue here. Maybe you can tell us something about their profitability.
Yeah, margins in the entire semiconductor industry are great. They're just fantastic, and that's same counts for ASML. So they have gross margins of about 50%, sometimes a bit more, sometimes a bit less. But for 2030, they are even pointing at more than 55% gross margins,
58 to be precise.
58 even. Look, They realized net margins of about 28%. And that's for a hardware company. It's not a Microsoft or a Google that makes their money mainly through software. So those are great numbers. The cash conversion as well, because, well, profit on paper is nice, but there's nothing for the shareholders in that. So for ASML, we see that the free cash flow conversion is around 100% over the last years. And this can bump quite a bit because sometimes ASML has to invest heavily in capex. But on average, it's more or less the same compared to their earnings per share. About that earnings per share, they grew, for the last 5 years, they grew with 27% per year. And that is just an insane number, especially if you compare it to the growth in revenues that we saw. But also that is a reason why ASML always seems expensive, right? A lot of analysts, they never tell you to buy ASML because it's always too expensive. They will always say to you the P/E ratio of ASML is 40, which is too high. What is your opinion about it?
Yeah, I think ASML is a typical example of a quality company, and we see that in the market overall, you have to pay a price for quality, and that's just the same with ASML. Of course, we can doubt about it if the valuation now is attractive or not, but we will. Yeah, in this analysis we come back to that later. But what are your thoughts about that ASML always seems expensive, maybe even right now, and we both bought the stock.
I think historically we bought it even PE wise for quite a good price now.
33 or something like that.
Yeah, I think the average since the COVID period, it must be more than 40. But yeah, it always seems too expensive, but ASML is growing very rapidly. So we see that the revenue in the last few years grew with, 20% per year, as you said. And earnings are even growing with 27% CAGR in the past 5 years. So if you account for that, like in the future years, then a PE of 40 is not that expensive.
No, no, there's still way more room to grow for ASML.
And ASML, of course, not the only company that always looks too expensive. Like you said, almost all quality companies, especially right now, they seem too expensive. For example, Costco or Hermes or Microsoft, that they all look very expensive, but they are not. At least most of them.
No, I think we as investors look too much at the short term, maybe next year, next 3 years, but real quality companies can grow for a period of 10 years, maybe even after that, maybe even 20 years. If we look at Microsoft, of course, that is an extreme example of a quality company. It would be such a mistake if you said in 2005 they are too expensive because they were trading at a multiple of 20. I think it would even be a great investment if you bought them at a P/E ratio of 50 or 80. That
Yeah.
with quality, price valuation isn't the most important thing as long as it's reasonable.
Yeah, fully agrees on that, and very well said, I think.
Thank you, thank you.
And what about the capital allocation of ASML? Can you tell us something about that?
Yes, of course. ASML returns cash to shareholders in the form of dividends as well as in the form of buybacks. And since 2013, we see they allocated way more money into share buybacks, especially in 2021 when the stock was at an all-time high, around 700. And at the time, I think even then I was a shareholder of ASML, and I remember opening the annual report and reading that they bought so much stock. Yeah, and at the time I really couldn't understand it. Maybe I was at the time even also too short term minded. But what are your thoughts about the massive share buybacks in 2021?
Yeah, we searched for some graphs on the internet, of course. We Googled some, and then you can see a graph with the valuation of ASML and the buybacks of shares. And it's not very consistent because when prices are very high, when the valuation is relatively high, ASML is buying a lot of shares. in the last few years. And when the share looks cheaper, they prefer dividend or holding it as cash or paying off debt. So they are not that consistent in terms of share buybacks, and they could really improve in that, in my opinion. So that's maybe a critical note to Roger Dawson and the management of ASML in the past few years.
Yeah, totally agree on that. Yeah, it's just almost looks like they are trying to bully us as value investors. When the price is high, they do share buybacks, and when the stock is and when the share price is low, they hold it as cash. That's yeah, I think Warren Buffett would have an opinion about that.
Yeah, he would raise these questions for sure.
Yeah. Okay, now let's go to some non-financial numbers. ASML sold in 2023 around 400 DUV systems and only 53 EUV machines. Isn't that a huge gap?
It is a huge gap, but you also have to look at the prices of these machines. So an EUV machine costs around 180 million US dollars, and high EUV machine even 350 million dollars. And the DUV machine, depending on the type as well of the machine, costs far under 100 million. Some machines even around 10 million US dollars. So if you look at the value of the sold machines, this will be quite closer than the 400 sold DUV against the 50 EUV machines.
Yeah. If we look at the absolute sales numbers, I think that's completely right. And also the time to make a EUV or a high NA EUV machine, yeah, it's just so much more complex. It's so much more time consuming. So yeah, that's just also a difference. What explains this huge gap between the type of machines.
Yeah, I think a high NA EUV machine is also triple or four times the size of a DUV machine. So the time it takes to work on those machines and to ship it to the customer, it takes just so much more time, and it also brings ASML much more revenues.
Yeah, and let's. I don't think we need to go too deep into this, but something I thought about is that I'm not sure if this is 100% right, but I thought I heard them talking in a call like if a customer orders a DUV machine, they have it in 2-3 months, and when a customer orders a EUV machine, they have to wait a couple of quarters before it get actually delivered to their fab. So,
Yeah, that's crazy.
yeah, yeah,
I think a lot of people underestimate the logistic process that it takes to make an high-NA EUV machine and then ship it to the customer.
yeah. It's crazy. It's crazy. And do we need to talk about depth at if we talk about ASML? Is it a risk?
No, we agreed it's not a risk because ASML's cash and equivalents are roughly equal to its outstanding debt. So that means that the cash reserves effectively offset the debt on the balance sheet. And that's why we don't see it as a risk.
No, that's completely right. And they also have sufficient cash on the balance sheet, and most of the debt is long term obligation debt. So that's quite safe to say it like that.
Yeah. And we already talked a bit about ROIC because it's a measure of ASML. Of course, we also calculated the number ourselves. So can you take us through the calculation of the ROIC from ASML?
Yeah, I will not walk you through the whole ROIC calculation because it's just a lot of numbers. Maybe you can look it up in the written ASML analysis. But the ROIC that we calculated for ASML is 42%, and that's just incredible. We see so much companies that has a ROIC of under 20%, maybe even around 10%. And this means that if ASML invest 100 euros into property, plant, and equipment and other operational expenses, they get the first year they get already 42 euros back from that investment, and the year, and this means they have the full investment back in 3 years, and that's insane. So many companies dream of a ROIC of 42%, and is just amazing.
There were many numbers, but I think if the listener doesn't fully understand it, he can just take a look at the written analysis. I think that one explains it very well.
Yeah, good addition. Let's go to the risks and opportunities. If you or do you want to talk more about the financials of ASML?
Now, I think we are ready to go through and go to the risks and opportunities.
Maybe you can kick off with the main risk of ASML.
Yeah, one risk that pops up in your mind immediately is, of course, China. We spoke about it many times. It's all over the news right now. But if China would invade Taiwan, that would mean that the most advanced chips in the world will not be produced for at least a few years. And I think this would be the biggest nightmare of TSMC, but also ASML and even companies like Amazon, Apple, Nvidia, who all let their semiconductors be produced at TSMC, mostly in Taiwan. I think that's a big risk for sure. But what's also a big risk related to China is the further banning of DUV machines to China. So the Dutch government and the US government already forbid ASML to sell EUV machines to China. But what happens if the government also prevents ASML from selling to China? Do you think that's a major risk for ASML?
This is just such a complex thought experiment because it is of course possible, and sometimes you see it on the news. They are talking about this, but if they do this, if the EU and the US decide that we don't ship DUV machines anymore to China, we don't maintain DUV machines anymore, um, then we push China just in the corner, and we will also stimulate them for developing their own lithography machines. So I think this is just not a good thing to do, but that's just my opinion. Of course, EU leaders and maybe even people in the US think totally different about this. But I think it would be net good if we keep shipping DUV machines to China. Maybe share your thoughts, Mathijs.
Yeah, fully agrees on that one. And also to add about the first risk that we mentioned, so a Chinese invasion of Taiwan. Well, in the short term, let's say in the first 5 years, maybe 3 to 5 years, when it happens, if it happens, every company, every business, maybe even the whole world will be in panic and will suffer great economic losses. But at the end, the world needs advanced semiconductors, and there's only one company that creates machines that can produce those semiconductors, which is ASML. So you would see, and I think you've written it up greatly as well, is that a lot of other fabs will be popping up in the US, in Europe, in other Asian countries that need ASML machines to produce semiconductors. So if you are invested in ASML or TSMC, I think you need to prepare yourself mentally for this moment, because there are many articles and there's even Chinese laws that say that at a certain point, Taiwan will be from China.
I did actually read a book about China, about the Chinese president Xi Jinping, to learn more about this situation between Taiwan and China. And to be honest, I don't remember that much of the book about the whole history of China and about Xi Jinping. But one thing I remember that is that it is actually a goal to reunite Taiwan to China. So China actually sees them as some kind of province, and Xi Jinping just wants to reunite both countries under the hood of China. And of course, there is a lot of resistance in Taiwan for this. Um, but when you look at the facts, China is so much bigger, so much more powerful, and a lot of the export actually from Taiwan is to China. So also they have economical power. Yeah, it's a very hard situation there.
Yeah. At the same time, you see that although Taiwan is slowly expanding its fabs into other countries. They want to keep by far the majority of the production in Taiwan because they see it as a kind of silicon shield. As long as the US and Europe are dependent upon Taiwan for those semiconductors, they will protect them.
Yeah, and this is so smart.
Yeah, they have a very good position with that. Maybe if that wouldn't be the case, then China would have already seized it.
Yeah, yeah, it would not. It wouldn't surprise me. Yeah, but do you think that TSMC, now they are expanding in Arizona, for example, in the United States? Uh, I did read that they also are going to do 2 nanometer chip production over there, and that is extremely that are the most complex chips in a few years. So, do you think the silicon shield will vanish over time?
No, I don't think so. I think they are smart enough in Taiwan to prevent this. Although I read an article, I think last week, that said that in that Arizona fab they realized the highest yield so far from any TSMC location. So that's a very positive sign, I think.
Yeah, I did read that too. That's incredible, right? That's I didn't expect that. Never.
No, me neither. It was very strange to read. But I think Taiwan will be smart enough to keep the far majority of production in Taiwan.
Yeah, of course, we are talking about only one fab in Arizona, and I think they have 4 or 5 enormous chip fabs in Taiwan. So the majority of the yeah chip production capacity is would be mainland on China on Taiwan.
Yeah. But at the same time, China is not doing nothing and sitting on the sidelines because they are also investing heavily in their own chip manufacturing capabilities. They even tried one time, maybe we told it as well in the last episode, but they once tried to reverse engineer an ASML DUV machine. So they bought one, put it at the university, got a lot of the best Chinese engineers there, and tried to just demolition the machine and then build it back up, but I couldn't get it working again. But however, they are still investing billions of dollars into their own chip manufacturing plants. So there's of course a chance that at the end they will be able to produce their own chips.
My thoughts are like there. I see 20 enormously smart Chinese technical engineers standing looking at the DUV machine and still figuring out how can we make this thing work. And yeah, where would the DUV machine now be actually?
I don't know. I think it's still not working.
I think it's still not working either. Oh, okay. And of course, there is the risk of disruption. Sometimes there comes an article by like I think 1 year ago it was Applied Materials to introduce some kind of lithography machine, and yeah, in the Netherlands the newspapers did write about it like maybe this can replace the ASML lithography machine, but after that, I've never heard something about it. But if there comes a new technology, a new machine that could produce chips as good as the lithography machines of ASML, yeah, it would be very hard to imagine that. But if this happens, it would be disastrous for ASML, I think.
Yeah, I think this is the risk with the biggest impact if it happens.
Yeah, lowest chance, biggest impact.
Exactly. Because once such a technology will break through, it means that it's probably more efficient than ASML lithography solutions. I think we wrote a part about photonics. Instead of using electrons to communicate within a chip, it uses light, which is supposed to be way more efficient. But I think it's still in the very early phase in development. A lot of things are uncertain.
And of course, there could be a company that's also that is now developing the machines for that, and they are now in the shadow. We don't know about it, and in 10 years, yeah, it would be the new ASML. Yeah, this is really an enormous risk, but have to
Yeah.
we have to look. We have to see.
I think I know one more risk. Um,
Tell us.
I was just thinking ASML has more than 5,000 suppliers, and ASML is a global company, of course. Well, with 5,000 suppliers, with every part to be connected perfectly in order to make the machine work, there's quite a high dependency upon each of those suppliers. And we know that a few of those critical suppliers are based in Israel. We know that there's a conflict now between Israel, Lebanon, Hamas, Iran, even shooting rockets to each other. Um, this could be a risk, right? What if things really escalate there?
Yeah, this is something we have talked about, I think,
Yeah,
but we didn't put it up in the analysis. But it's good we discuss it here. Yeah, I think you are completely right. If if there is a critical supplier in Israel, I think Forget maybe has sleepless nights because of that. I don't know where it's located or something like that, but this is an enormous risk. But also, if a critical supplier can't develop better parts for the ASML machine, it will also be,
yeah.
yeah. ASML has to grow, has to develop new machines, better machines for the customers, because otherwise Moore's law is gonna end soon, and that's not what we want.
So what you say is every supplier has to keep pace with ASML, and
Yeah,
if one business cannot do that anymore, that that is a risk for ASML.
yeah. Not all 5,000 suppliers are critical suppliers, of course, but maybe 100 of them do make really, really, really complex parts for the ASML machine, and if they can't keep up, yeah, it would be a big problem.
What do you think about if you speak in terms of probabilities now? Very difficult maybe to estimate, but yeah.
That is the big question, and I don't think we can, yeah, give a measure that good. And I think only the account manager of the supplier can assess that really well. But I think we can't. Yeah, but it is a great risk.
Yeah. Enough risks now, I guess.
Enough about the risks. Let's go to the happy side, opportunities. Talking about opportunities, 3 years ago, maybe 5 years ago, nobody was talking about AI.
No, that's right.
Yeah, and now it's just mainstream. It's on the newspapers. The headers are AI is gonna replace that many jobs. And I remember Peter Wenning talking about this on our earnings call, and he said it was at the start of the AI boom, and he said like this is just something that's inherent of our business model. If we are surfing on so many trends, just robotization, AI, more sustainability trends.
Robotics, yeah.
Yeah, exactly. The world is constantly seeking for more efficient and faster and smarter machines and systems. So this is something. Yeah, in every machine, in every system, in every solar panel has to be a chip, and most of the chips are getting produced by ASML machines. So ASML will, yeah, is just so well positioned to capture new opportunities, new promising waves, and also to ride on, for example, the AI wave that's now happening.
Yeah. And I think you can name much more other waves that could really take off in the coming decades. Think about the race to space, for example. If you look at how many Starlink satellites SpaceX is shooting into orbit right now, for example, or if you see how many videos of robots we see nowadays, robots that can basically do everything. They can interact with people. I think it was a robot of Tesla. It could just speak very naturally to people and interact in a very human way, I would say. And of course, to be able to build those robots, you need a lot of advanced semiconductors.
Yeah. And indeed, the robots and the computers, that are things that we see that contain semiconductors. But if we look at data centers, these are enormous. Yeah, they are full of chips and we don't see them. But if we use a large language model, or we use Facebook, or we use YouTube or some other social media platform, they basically run on data centers. And they, yeah, data centers pop up everywhere in the Netherlands right now because
Yeah.
yeah, it's there's so much demand for chips in the future, and ASML will certainly benefit.
The Netherlands, one of the most dense countries on earth. Let's put a lot of data centers within it.
Oh yeah, the government needs to make some hard decisions.
Okay. That's another other discussion, of course.
Yeah, yeah, of course.
But yeah, let it be clear that ASML is surfing on a lot of tailwinds and megatrends. I think a second opportunity could be that China gives up on the race to make its own semiconductor industry. So if China would stop investing in it, then this would be the ultimate confirmation that ASML's technology is irreplicable.
This would mean that one of the China risks, because we have three of them, like invading Taiwan or something. But one of the China risks, which is making their own EUV or lithography machines, is disabled. So that would be great for ASML. And the last opportunity, I think, is maybe even one of the most exciting for ASML, is that the wave of deglobalization, which basically means more fabs overall in the world, on more continents, will take place. And yeah, today every region just basically wants to own semiconductor fabs. We see it in Germany, in Dresden. We see it in the USA, in Arizona. I think even in Saudi Arabia, they are talking with TSMC to put some fabs in the desert. It's crazy.
Yeah, for ASML it's quite strange because the more inefficient the fabs operate, I mean, the more fabs they have, the less efficient they are most of the times. The better it is for ASML because every fab needs to be equipped with an lithography machine by ASML.
Yeah. This is just something that's coming to take place in the coming years, and this is so exciting. And ASML is just really gonna benefit from this. I'm trying to take a grasp into the history of how this was 10 years ago. Of course, fabs were expanding in Taiwan, South Korea with Samsung or Intel in the USA. But how large would be the impact of this? Do you think, Mathijs?
It depends. I really don't know.
No, it's.
It's a very difficult question.
I'm sorry.
It also depends on the size of this deglobalization. How many countries?
It's not a clear question of me. I'm sorry, but because it's also dependable on the size of the fabs and things like that. But yeah, I think this is certainly a tailwind for ASML. Should we go to the last part of our analysis, Mathijs?
Yes, let's go. And I think that's the valuation. So I can say something about PE, and then maybe you can say something about the scenario analysis.
Yeah, that's fine.
Yeah, we talked about it. ASML is always or seems always expensive PE wise, and ASML has a current price to earnings ratio of 37, more or less in line with the average in the past few years. Most of the times it was a bit higher. It used to be, especially in 2023. I think last year it was even up to 50. But yeah, you made a scenario analysis to see what is the value of ASML. What can we expect as a return as shareholders?
Okay, so the input for the scenario analysis, it runs to 2030, and they grow with around 9% a year, based on the midpoint outlook of 2030. I think in 2030 they will have an exit multiple of 25 because that's it's a monopolist in a growing industry, and I think they can grow also after 2030. And with a profit margin of 35%, which is quite rational, I think you get an expected return of around 10% per year, including dividends and share buybacks.
Yeah. And here your margin of safety is included in your conservative assumptions, right?
It's just a midpoint, so I'm not sure if it's that conservative, but it's I think it's the most rational and the most let's talk about chances. I think the chance is very high that they reach their midpoint outlook of 2030. So
Yeah. At least for me, it's difficult to know what the position of ASML is in 10 years from now. But I think with an NPE of 25, you are quite realistic. As you said, even then, I don't see a lot of trends to end. I think maybe it's just a start of some trends. So I think that is quite conservative.
yeah, and with this, you get an expected return of yes, just 10% per year, and yeah, just valuation wise, it's attractive. It's good.
Maybe it's good to mention because we both bought the stock again. I mean, we increased our position in ASML after the dip resulting from their Q3 statement with a very strong downwards revised outlook for 2025. So for 10% a year, why are you willing to take the risks that we mentioned? Because there are quite some risks. So why are you willing to take them for 10% per year?
I think the opportunities are bigger than the risks. So that's the short answer to your question. Also, China, of course, it is a risk, but I think the risk is yeah not that big because if you look at the effects of the risks, the largest impact it could have on revenue, if all the revenue of China disappears, it would be a maximum of 20% of the revenue disappear. And of course, this is an impact on ASML, but not that huge. It would not be a disastrous investment if there is happening something with China that's not in the favor of ASML. So I think the opportunities here and the business model of the mode of ASML is so strong that I'm willing to take them at this valuation. And what about you?
I agree. I think some of the risks that we mentioned, they can cause for a failed investment for the coming 10 years, maybe. If we take a longer view, then I'm talking about China invading Taiwan, for example. If ASML cannot deliver machines for a few years, it will mean that maybe even ASML is operating against a loss in a few years. So it will hurt any investor, I think. But if we take an even longer view, so we look back 10 years from now, maybe 15 years from now, it could be an opportunity. I agree on that. But the business case for me stands with the market position of ASML as a monopolist, as a technology leader, with a great network of suppliers, of clients working very closely together, with a clean balance sheet and this 10% value, this 10% return per year for the next 10 years is for me quite conservative, seeing the mega trends that ASML is facing in the coming years. I don't know if I was very clear in the beginning, but if not, you can just cut it.
No. It's good. And maybe we can share the prices at we bought the stock. Maybe the listener would appreciate that. I will start. Then you can look it up in your Excel sheet. My price of my purchase was 630 euros, and I will see in 5, maybe 10 years if that was a good decision. But I think the odds are in my favor. What about you?
Yeah, I just looked it up and I bought it for 635 euros. I think I increased my position with around 30% compared to my initial position, and that brings the total weight of ASML in my portfolio at almost 10%.
Okay, and you also own TSMC shares, right?
Yeah, that's a much smaller part, but TSMC is around 5% of my portfolio, which means that the total weighing towards the semiconductor industry is 15%. And then I'm not taking into account Amazon, for example.
No, no. Okay, this is very hypothetical, but if China invades Taiwan and the fabs of TSMC, the most advanced fabs, will be out of production, uh, I I think TSMC could easily see maybe even 80% decline in share price. What are your thoughts about that?
Yeah, maybe even more.
Yeah, it's crazy. They have fabs in Japan, America, and Dresden in a few years, but
You know, the thing is that
uh,
the knowledge is still with TSMC. There's still no other company that can produce at the yield that TSMC does. So they will decline for sure with 80%, 90%, maybe even more. But am I going to sell my shares then? I don't know. I don't think so. Because we know the risks,
yeah, and it would also be the shares of ASML you are talking about of TSMC.
both.
Okay, okay, yeah, and TSMC would not be a 0.5 position in your portfolio, so it would be yeah, very small. But I think I will also not sell any shares if they invade Taiwan from ASML as well as TSMC. Okay, I think. Do you have something to add here, Mathijs?
Not really. I think we more or less just gave the conclusion. But if you can wrap this up in just like a few sentences, or what would you say?
Okay, okay. The conclusion. Yeah, ASML is just a phenomenal company, and in the earlier analysis, we have talked about the business model, about their moat is just incredibly strong. Yeah, and they have built it up decades of know-how, and they're so specialized in just one machine. I think they are investing about 4 billion euros every year to, yeah, strengthen their market position, to give the machine upgrades. There's no other company that comes even close to investing that much in R&D and lithography systems. So the company is just very strong. The moat is very strong. The financials look solid. The management looks good. We have to see in a few years what we think about the new CEO. I think it's a too short period of time to make, yeah, to assess that right now. But he looks good. And yeah, the opportunities and risks are, yeah, we've discussed them. I think the opportunities outweigh the risks of ASML for ASML. Anything to add, Mr. Munger?
Mr. Munger, not this time. I just think that ASML is one of the greatest companies on earth. But it's very good to keep in mind that the risks for ASML, they are way higher than for the average company. And also know again that both Bouke and me are very biased because it's for both of us a substantial position in our portfolios, and also because there might be some home bias because ASML is a Dutch company. So again, do your own research if you are interested in ASML, and also really take a look at the risks if you're willing to take them.
Always do your own research.
That is very clear.
Okay.
That couldn't be clearer. Now, I think then we are coming to an end, right? Or do you have something to add now?
No, I have nothing to add.
All right. Then I think it is good to wrap up. Please let us know if you liked this way of analyzing companies. Of course, we did two parts now. with 2 analysts working on it. So please let us know by email or by phone what you think of it, and maybe if you want to see this kind of research for another company, another big company. And of course, thank you for listening to these 2 episodes of ASML. We are very grateful for it. And I also want to thank you, Bouke, for this research that you did together with me for the last 1.5 months, I think.
Yes, thank you, Mathijs. I did like researching a company with you, so it was great.
Are there any companies that you would like to analyze in the future, like in this kind of way?
Ooh, maybe I'm thinking about Microsoft because they have so much segments, so many revenue streams, like the cloud and the computing. Yeah, Microsoft pops up to me. And what about you?
A company that's in my head now is Process, which is one of the like holding companies of Tencent. It's also a very complicated, very large business with many segments. But I think that like all of big tech is so big that we can do them easily with the 2 of us.
Yeah, maybe we can make some kind of season for big tech with 2 analysts on one company.
Oh yeah, we can do that, yeah.
Okay, but listener, let us know what you think about this, and we will see you next time. Thank you.
Bye bye.